Hi, I'm Pranav, a wealth manager at 𝐓𝐡𝐚𝐧𝐤 Financial Services, and today I'll be explaining about why the rupee in the last few weeks has been falling. So let's dive right into it. So the USDINR was trading at approximately 74 rupees at the start of the year, and today in June it is trading at an all-time high of 78.6. Now there are a couple of factors which have driven the rupee down, and they're all interlinked to each other. Those are the crude oil prices, the inflation going up, and also the Fed hike rate. Let me explain to you how they're all interlinked. Alright, let me start off by explaining why crude oil prices has been surging in the last couple of months. Let me take you back to mid-February, where the Russian-Ukraine crisis had broken out. So following that, a lot of Western countries had imposed sanctions on Russia, which is one of the largest exporters of crude oil. Now because of this, Russia couldn't export crude oil, hence the supply went down and demand had gone up, which caused the oil prices to go up exponentially. Alright, so as we know it, India imports most of its crude oil, and because the crude oil prices had gone up, we had to pay more amounts in the US dollar to import the oil that we need. So this caused the weakening of the rupee. Alright. Now because crude oil prices went up, other commodities as well started going up, which caused an inflation in most countries as well as in India. So we as analysts at 𝐓𝐴𝐵 Financial Services do believe that as long as inflation numbers are high, the rupee is going to keep taking a hit. So what has the government done to curb inflation? Well, recently the Indian government has increased the repo rate, which will further reduce the money supply in the market, which will reduce the purchasing power of people, and hence inflation will come down. So now, too much inflation isn't really good for developing economies or even developed economies. So what the US federal government had done to fight off this kind of surge in inflation was to increase the US 10-year Treasury yield. Alright, so when they increase the US Treasury yield, it becomes a more favorable investment for foreign institutional investors rather than investing it in equity. Alright, so foreign institutional investors had removed the money that they had parked in the Indian markets and had put it in the US 10-year Treasury yield. So what this does is it weakens the rupee further. Why, you ask, is all because when they are removing money from the Indian markets, they have to sell the rupee and buy the US dollar, which strengthens the US dollar and also brings down the value of the rupee. Alright, so this concludes this short video on the depreciating rupee. We really hope you enjoyed it and actually learned something from it. If you want us to explain something further, please do let us know in the comments. Thank you.